No surprises today. We'll see you on
Hello.
Wednesday. Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the show where you come to be informed, amused, but never, never, never misled. As you know, last week, well, I had a little surprise from the little missus who's been, shall we say, stalking me. I don't know if it's to serve me with divorce papers or what, but today I'm prepared. I'm now in a different island, undisclosed. The island of Kauai, undisclosed. The island of, well, never mind. It's not the island of Kauai, okay? No matter what, don't even think that. I have Astro Boy right here, protecting me, giving her this in case she shows up, and I have glasses on both sides, so she won't know which side to attack me from. But because I have Astro Boy in the front, I'm going to put the glasses away, because I risk my life for you every day of the week to bring you the truth. So today, our show is called Surfing the Waves Part 2. We're going to have some amazing information. As a matter of fact, you are now going to see how well charts work. And please, if you want this information all the time, don't forget to like and subscribe down here in the sand. We love you guys. We want to see you guys here all the time and never miss a single dramatic episode. So with that, we'll be back right with the charts. Welcome back, everybody. We're going to show you some amazing information that the charts are going to contain. How many weeks in a row, how many months in a row have you heard me say the same thing, and the same thing? And you wondered, is this guy ever going to be right? Well, today, believe it or not, I'm right about something, which is incredible in and of itself. So we're going to start out with the canary in the coal mine, which I call Tesla, the canary in the coal mine. And after Saturday Night Live, let's just say that someone lost their luster. But if you look at the chart of Tesla, it has broken down below the bear flag, just as we predicted. This thing is leading the market and leading the tech stocks on the way down. Overvaluation, of course, could never be a factor in this thing. I mean, after all, it's never made a profit in its life. But it's broken down from a bear flag. I've got it circled, and we're not looking good right now. This is clue number one. Now, the canary in the coal mine number two is something that Mr. Tesla, or Mr. Musk, who runs Tesla, bought. 1.5 billion, pretty close to the top. And let's see, there's Bitcoin, and it's making an ascending wedge type of formation as a little bit of a snapback from its top. And in sort of dotted lines, I've shown you what the wedge looks like and where the arrow shows you where it's going to go. It is about to lose another 200 to 300 to 400 points over the next several weeks. And there's nothing you can do about it because the company really doesn't have that much other than this great technology, supposedly, but they don't make any money doing it yet unless they get it from the government. I wanted to go back to Bitcoin, though, because I can't shut up about Elon Musk. But anyway, Bitcoin is the other coins, the altcoins, Ethereum and Ripple and Bitcoin Cash. All of them are doing relatively okay, some making new highs. Now, the difference is that, except with Bitcoin Cash, the difference is that these are actual companies. I mean, Ethereum is a company, Ripple's a company, they issue tokens, and they actually have a management structure, and they have shares, or probably some people have shares, some people have tokens, but they have corporate governance all set up. Bitcoin is an island in and of itself. It runs apparently on autopower. Someone whose name we still don't know just set it in motion one day and doesn't care about the fact he's supposedly worth $60 billion. He just wants to be left alone. He did it for the good of mankind. Okay, and I want that very clear. And we're going to have another segment of Bitcoin Mysteries at the end, because in case you didn't catch Bitcoin Mysteries 1 or 2, you're going to want to stick around to listen to this, because you will not believe what Bitcoin really is. The Dow Jones Industrials. Hey, last time I said ascending and ascending and ascending. I left it there, but look, it broke. And that's what you'd expect. Ascending wedges are almost always bearish because of the angle. And the angle is unsupportable for a long period of time, especially in the economy whose natural growth rate is probably 2%, if that. All right, and so here we go. Dow Jones Industrials. Enough of them broke down, and we're off to the races. Except the wrong way. The wave that I'm talking about. There's three of them. It's inflation, it's interest rates, and it's overvaluation over speculation. Those are the waves you ride, not the waves that say Bitcoin's going to $1 billion a coin. Because that wave, you're going to be sitting on your surfboard and sitting on your surfboard and sitting on your surfboard, and you'll be lucky if a tsunami doesn't come wipe you out from that one. But if you point it in the right direction, the tsunami will coast you all as far as you want. So it's just a matter of being realistic and knowing which way the wave is coming to push you. All right. Oh, the NASDAQ, by the way, also broke an ascending wedge. Surprise, surprise. We called the top about a week ago. It was a week ago, as a matter of fact, from today. And I said, no one calls the top, no one rings the bell at the top of the market, but ding, ding. I should have been a trolley conductor, because that's fun. Except they pulled them. They went ding, ding like that instead of ding, ding like that. Anyway, NASDAQ doesn't look too good. Neither do the individual issues. We're not going to show you how they started to curl over and bring the whole thing down. And that was the whole point that I've been going through for weeks, is that it turns about as slow as the Titanic. You know, it doesn't exactly turn on a dime. It turns on, something really big. So that's NASDAQ. S&P, look at that, broke down out of an ascending wedge. And what did I say a couple weeks ago? Looks healthy to me. If I didn't know better, it looked healthy. Well, it was in an ascending wedge, and interest rates are going up, and inflation is going up. So those are kind of factors that need to be considered. The small cap index, this one's also heading on down. As you can see, this thing has already broken its little bear flag, and the small caps are just they suffer from illiquidity, and they are not in for a good run at all. The transportation index, this thing has been unstoppable, but look at it. It's broken, or it's right on the trend line, probably going to break down, and this is one of the last bastions of strength. We'll see what happens when we come with the banks, but transportation, sort of economy, retail, those kind of things that were stimulus oriented. And I'm sorry about that, but I still haven't gotten any of my 3, 4, or 5 stimulus. Yeah, I should get my medication again. I think I got to double my medication for that because of Tourette's. The Tourette's caused by the government's, failure to pay stimulus checks to me is just driving me nuts. Okay, as if I weren't already. U.S. dollar has broken key support. This is critical. The dollar now has no support. It is on its way to a new leg down. The dollar would actually be a hell of a lot lower if it weren't for the fact that this is the dollar index. The dollar index is mostly made up of the dollar and the euro. So if it's performing badly against a euro, it's going to go down. The euro could be performing terribly, just the dollar performs terribly worse. They're both pieces of you-know-what, and you're just comparing two crummy things against each other. But when you compare the dollar or the euro, for example, against a good, something you buy, well, you're getting slaughtered there. And we see that in real estate right now, and I'll get to that in just a second, too. CRB index of commodities, I know you're probably sick of seeing this graph, but it goes up every day. Have you noticed this? I mean, this literally has had 2 small pauses, and it goes up every damn day. And what's amazing about that is that it's 100% in a year. That is almost unheard of. I do not know of a historical precedent for that. I really don't. There may be one out there, but I've not found one that would have a 100% gain year over year, other than a country that was about to enter hyperinflation. I'm not predicting it here, but you can never say never. Lumber, we talked about this. We've talked about this a couple of times. Look at that thing. It finally actually made, it actually finally is coming back to its trend line, because everything can't go up at a parabolic rate straight up like that unless people are just buying emotionally and stupidly. But I would still think that it's going to be in short supply. You cannot grow a tree in 5 minutes. So, basically it's what economists call supply inelastic. That means if the price goes up, you don't get an immediate nor a large reaction in supply. Same with oil. You can drill for oil, but that takes a year. Permits and everything else, refinery, everything else, pipelines, all that. So if the price of oil goes up from say 2 to 50, okay, you're not going to get any increase in production until maybe a year later, maybe a little bit. They'll uncap some small oils, some small wells, but that's about it. And this is where companies make inventory profits. In the 1970s, which I know is well before any of your times, and it was pretty much, I was dodging dinosaurs back then. They were pretty much a Tyrannosaurus Rex, almost bit my head off a couple times. But, back in those days when we had inflation, what happened was the natural human reaction, and a lot of this is psychology we're going to be talking about right now. The human reaction, the psychological reaction is to hoard. So right now, I don't believe the price of lumber would be as high if people were not hoarding it because they're afraid it's going to go even higher. And even the companies that sell it are reluctant to sell it because they think they're going to sell it higher. And that's what that's what makes a small shortage a large shortage. And then all of a sudden you multiply that by all the goods that are not enough out there, and you have shortages everywhere. Okay, and that's why you have bottlenecks, because the shortages don't happen to occur where it's convenient for a train or a ship or anything else to go. The copper mines, another one. Copper is going up through the roof. This is the highest in history. This is the second leading material in a home, and what I'm afraid is going to happen here is what happened in like 2008. They're going to run out of materials and the prices are going to come down, and there are going to be a bunch of non-finished homes due to lack of materials, the cost overrun. The developer does not want to charge more than he doesn't want it to cost him more than he charged the consumer, and that is going to happen here, I'm afraid, and that's not a good situation. Crude oil, same thing, but we do have we have that pipeline situation. I don't think that's going to make that big of a difference. There's a lot in storage. Crude oil is still going up, primarily because the dollar's going down and it's priced in dollars. That is the main reason. I haven't heard a lot about shale coming on stream. I think shale might not even be economic at 60 anymore because of, what's the term again for prices going up? Oh yeah, inflation! All right. Unleaded gasoline, which comes from crude oil, of course, they refine it. And same thing, still going up. People are driving more, and apparently those Lyft drivers are going to get a raise pretty soon, is what I just heard. And I, bully for you guys. I mean, it's a cheap ride, and it shouldn't be taken off your back. Agriculture. Here's the problem. Here's the biggest problem of all. We are really staring right down the barrel of food shortages. This graph ought to tell you that right now, because food, everything, there's spot shortages everywhere. We grow food in so many different states. California has a lot, Florida has a lot, Texas has a lot, but they grow potatoes elsewhere and other things elsewhere. And the logistics of getting it to a supermarket chain all around the place is a little harder than it used to be. And so, the price of food is going up, not only because the price of transportation is going up, because the price of gas is going up, but also every other component to growing crops the price of it's gone up. So the price of food is going to go up. So the companies that produce food and sell it to you, they're going to have a hell of a big margin until they start having to pay people more, and they're dragging the feet on that, I guarantee it. Base metal fund. What else can I say? Pretty soon it's going to be, a penny's going to be worth more than a dollar, because a dollar isn't worth anything, really, the paper. And a penny actually does have some metals in it. So I don't know how long that's going to be, but right now when you see a graph like this, just unbelievable, relentless rises, that anything, steel, buildings, girders, infrastructure, all of that is going to be more expensive. And gee, who is it now that wants to spend a whole bunch of money on infrastructure and announced it and as a big deal? I can't think of who that is, but I think he might be a very senior guy in the country, makes some decisions, I heard, and he doesn't understand, I think, that he's also contributing to inflation by making announcements like that and saying that there's money going to be thrown everywhere to the construction people, except, of course, to the ones who tear down the racist freedoms. And thank God I know we have them. I would have never known if it weren't for Pete Buttigieg. Oh, gosh, gold 20 years, the only metal that isn't going anywhere. But wait a minute, it just might be. Gold on this chart, you can't kind of see it because it really shows a magnitude, or you're sort of a 100,000 foot level of gold. The reason I put it here is to show you that in the grand scheme of things, if you're a long run holder, you know, you're going to have periods that are going to be parabolic, periods where it's going to just kind of consolidate. And we are in another parabolic period with the consolidation. Now, how high it will go is another fake out. Can't say for sure. I'm always hopeful. I'm always wrong. But well, who knows? Maybe I'll be right this time. The next one is gold 1 year. And look, it actually has broken out if you look at it on a 1 year basis. But that's not good enough because it did that a few months ago and made me look like an idiot. So I'm not going to say it's broken out definitively. And none of the miners look all that good anyway. I thought they might. We're going to keep an eye on this though. Gold must go up. Silver must go up. For the simple reason that no more of it can be made and as many dollars can be made as possible. So there's no other way for the price to go but up in terms of dollars. That's all there is to it. And probably same with Bitcoin too. I mean, it, you know, in the long run, it may have to go up. I would not recommend buying it here, but you know, it's in limited supply supposedly, and the dollar's not. The dollar basically is, hey, print them all day long if you can. So let's go on to the next guy. Is silver. Silver looks pretty good. I think it will break out, but it's still in a sideways pattern. Palladium, same thing that we've shown you for weeks on end. This thing is just gangbusters. Now platinum. Platinum has different uses. It's been more expensive than gold. It's not right now, but platinum also looks like it's about to head higher. So, you know, call it a semi-precious metal, which is what I would refer to it as. But it's still beautiful. It makes great wedding rings, makes great jewelry, and all that. So, you know, love platinum, love it. It's going to go up. It looks like, you know, it's going to follow along with all the metals there are. 10-year treasuries. We talked last week about an outside date, about how there was a key reversal on the jobs report that came out so much below the million that they predicted. Maybe because they were paying people not to work. I don't know. Some of them don't think so anymore. Apparently, well, you know, it could be something else. It could be something structural in our economy, like racism. No, 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 no. Human behavior is this. You get paid to do something unless it is something that is abhorrent to you. And sitting on a couch and watching, you know, the Flintstones is not abhorrent to anybody I know. And if that's worth more than working, you're not likely to get off your butt. That's all there is to it. Now, the fact that they don't understand that is beyond my comprehension. I'd be happy to give Congress a economics class. All you got to do is call me, guys. You got my number. All right. 30-year. Look at that. It broke out of its consolidation. I think I said last Saturday it was going to break out because it had a full outside day. It looked like it was ready to just go boom, and it did. So this one is one that I believe could be bought. The equivalent, I think it's called TBT. We'll look at it at the end. And I think that one could be bought right now, right here, in anticipation. Either hedge your rates that you have if you're exposed by variable rates somehow. It'll provide a good hedge, and it might make a good spec because rates pretty much have to go up. I don't know how you keep them down. I don't know how it's possible when inflation is running at like God knows how many times the 10-year bond rate. Right now, we don't even know what the CPI is running. It's supposed to, oh, actually, we do. I'm sorry, we do. The CPI came today. CPI is the Consumer Price Index. So it came out today. They do it monthly, and it was up for the month of 0.9%, the most in 40 years. 0.9% annualized comes out to like 12%, the double digits, if you compound it. Gee, that's starting to sound like those 70s I lived through. Well, actually, I was just a toddler then, but I lived through them. You had gas lines, you had rationing of electricity. You couldn't put your lights on at night because, you know, you didn't fall under the right category, but you had to do everything to save energy. Meanwhile, they were doing a windfall profits tax on the oil companies as the price of oil went up. And the reason the oil price went up is because we didn't have competition here, and basically we let a cartel set the prices. And look how powerful they were once competition came back. They don't have a bit of clout. These are again the tips. We showed you those last week. I want to make sure to show these kinds of securities a couple of times so that when you have a question yourself as to what's going on, you can refer to these. These are securities called Treasury inflation protected securities. They go up in principal when inflation is supposed to go up and down when it's supposed to go down. So it's been having quite a run in the last several months, which means that investors have been pricing in inflation into these notes. The problem with this is that it's priced off of the CPI, which is the formula, and the CPI is the formula. Multiply it by 4, and then you'll get the real inflation rate. Investment grade corporate bonds also, they rallied a little bit. Now they're going back down again. Here's another hint that interest rates are going up and maybe the credit quality is starting to deteriorate just a bit. This thing broke down out of an ascending wedge. God, you must be so sick of hearing me say ascending wedge. But I told you so. I knew I had to get that in, sorry. Because if I was a woman, I'd be all over me for being so damn right today. All right, here we go. The Ultra Shares, 20 plus year treasuries. These you buy if you need a hedge against higher interest rates. These you buy if you need a spec that's going to go up with rates, okay, right here. This is something you can take a little position in. Not much else, but this, all right? Apple. We showed you this last week, still a bear flag, but look at it. It's just about to break out, break down. It's right at its support for the 1-year graph, and the 5-year graph looks the same thing. This is a big pattern. What's going to happen when it breaks? It's going to take years for this thing to continue to go down and up and down and up and down. And all the buyers are going to just turn over and turn over and turn over because they want action now. They're not going to get it now. They got it before, but once they get sick of waiting for it to happen, they're out. They just want action. They just want to chase things. And once they're no longer worth chasing, they're out. So you're going to get a whole lot of that churning going on here. And then when it finally breaks down, it's going to take a long time. And same thing with Amazon. Here again, you've seen this chart a million times. This is what Amazon looks like on a 5-year basis. This thing will also probably break down. And when it does, who knows what the hell to do with it. All I know is this: it could continue to grow and earn more money, but the inflation rate, if the inflation rate goes from 2, which is what Jay Powell thinks it is, 2 to 8, which is where I think it will go, at least on the 10-year, maybe 10 on the 30-year, you're going to see multiples cut by like 75%. Okay, so if Apple's trading at 25, it's going to trade at like 11 or something like that. Something trading at 50 will go down to 15. That is a hell of a drop, and especially if we have a recession or something like that, which we're due for, it could be a double whammy. That's why these things, they go up on the expectation, the hope of everything being good, and then they suddenly realize everything's not so good. Just like Wile E. Coyote stepping off the cliff and going, uh-oh. So, Facebook, yay! Look at that. I was so pissed last time against Mr. Censorship himself. And I've discovered something that I'll tell you, just little tidbit here. I've talked about cable news being the leading cause of mental illness. I now know what number 2 is. And you're staring at the graph of it right here. It broke down, thank God, but don't watch Facebook too much. It also will give you all kind of brain seizures. I should know, okay? Oh, God, I gotta get some of my meds back. Microsoft, this is the 1-year chart starting to curl over. Now, if you look at it at 5 years, it's in a big ascending wedge. This is going to take a long time for this thing to work its way off. If you think Microsoft will just decline and then rally again to new highs, forget it. This thing could be at this level for the next 10 years. It could be dead money. And as a matter of fact, that's exactly what happened after the dot-com bubble. It was the most valuable company in the world, and it was dead money for 10 years thereafter. Netflix, same thing, wide channel, and look at that right here. It broke down out of an ascending flag. Qualcomm also has broken down. Just as we thought, we drew that one in correctly for a change, and it's broken down. The chip companies are experiencing tremendous shortages. I'm not quite sure what it is, if it's logistics or what, but cars are such electronic vehicles, they can't build cars without these chips. So you have it, these guys can't build the chips, they don't have the capacity. The car companies can't get them, so they can't get them off the lot. So this is the kind of thing that stimulus causes. Okay, notice I said that really calmly. Stimulus. It doesn't stimulate anything but crap. Bank index, they're still doing pretty well, although they fell on Friday and maybe turned around. I don't know. We'll have to follow this. These were among the last really strong companies. Broker dealer index, look at that. It's broken down too. So it looks like we're not going to have this slew of deals anymore, or something like that, or lesser deals than we thought before. Airline index, it looked like it was breaking up before. It's now breaking down. So yes, I'm being a little vindicated. But how the hell could these things go anywhere when they lose, tens of billions a month? That's beyond me. Big oil index, this thing looked like it was a head and shoulders. It's broken up. It's breaking away. It's a commodity. That's why you want to own it. Dow Jones REIT index, we've talked about real estate. They are not in a bubble. I want to make that clear. Not in a bubble. The reason I say that is that rents have gone up 11% in the last year by two of the major landlords. So if the cash flow from real estate has gone up, the value of real estate has gone up. And as the value of the dollar has gone down, the value of real estate has gone up. So you have two forces pushing it higher, and I wouldn't be worried about it being a bubble right now. We'll worry about it being a bubble when they start building the next 200-floor skyscraper in Dubai, setting a new world's record. That usually marks the peak of a real estate boom. Home builders. Oh my God, look at this thing. It actually finally broke down to out of an ascending wedge. If you recall, we were telling you it was coming right to the peak, and it had to do something. It broke down. The healthcare sector still doing relatively well, though it broke down a bit today too. What's interesting is so many sectors broke down simultaneously, and that's what I've been saying. You have to have uniformity of movement for it to start to become a wave. And it is a wave. Devaluation or reduced valuation of these kind of companies is a wave. We've talked about interest rates as a wave, inflation as a wave, and this is a wave. And I would like to, conclude with some comments here. I am right here in beautiful Kauai. I feel so good. I've no one stalking me, and I'll have some closing words, including the Bitcoin mysteries, in just a second. Welcome back. We're going to have some final comments about the Bitcoin mysteries, and we're going to tell you some stuff. If you haven't watched the last couple episodes, last couple shows, you ought to see this, because there's a lot more or a lot less to Bitcoin depending on how you look at it. First of all, there is no Bitcoin organization to speak of. Unlike Ethereum or Ripple, which actually have management companies, etc., Bitcoin is a mystery. No one claims to have developed it, except a fictional character named Satoshi Nakamoto, who doesn't exist, and then a guy named Craig Wright did an interview with BBC claiming that he invented it but wants nothing to do with it. So we are to believe that somehow this Craig Wright spent 25 years developing something so sophisticated and wants nothing to do with it, and all of a sudden just released it on its own recognizance, and it's by itself turned into a $1 trillion industry. That's one thing. Now, the other thing about it, which is kind of odd, I find, is that Bitcoin has not made many enemies. For example, why wouldn't the IRS be all over it? They're asking for voluntary compliance. Have you ever heard them be voluntary in your life? The Department of Treasury doesn't really say much about it. The Fed doesn't say much about it. And pretty much no one in Congress says much about it. It's just all accepted. It's just there. So, to me, that doesn't quite piece together well. I want something tangible. And speaking of tangible, I want you to look at the brand new Hoot coin designed by our very own Katie Devich, our new art director. This coin is going to be not only a limited edition, but a work of art and a collectible. So, we're going to have these available for sale for Christmas, and they are going to be spectacular things to put in stockings of everybody who has been naughty or nice. And me, I've been more naughty than nice, so I probably won't get too many. But in any event, check these out. They'll be coming up on the website very soon. Well, everybody, it's time to come to a conclusion here. Thank you all for watching. Please like and subscribe here on the sand. And I am so thrilled to say that in Kauai, I didn't get stuck. Nothing went wrong. It's been a beautiful day. And I just cannot wait for the next show because this one has been the charm. Nothing has gone wrong in this show whatsoever. And I'm so used to things happening that...